Hey guys, welcome back to the channel. I've got a special video on tap for you today. We're going to get away from the normal top 3 trading ideas on my radar for the week ahead and give you guys a little bit of a training lesson, because we've been having some very good discussions over the past few weeks, not just here on the YouTube channel, but on the podcast as well, about what it takes to develop as a trader. We're not talking about short-term success. We're talking about a consistently profitable trader, long-term success over time, and some of the habits that you have to have, some of the things that you need to do if you want the skill of trading, meaning the ability to kind of adapt and adjust to different market conditions over time. And I got some pretty good comments on it, and we're usually talking a lot about price action, technical analysis using price movement, structure, stuff like that. And I got a question about, hey, what if I'm an indicator-based trader? Do these lessons still pertain to me? And the answer is yes, 100%. And here's the thing, right? Going back to kind of the original conversation of, you have 2 choices as a trader. You can look for the shortcut, look for the magic system, the magic strategy, the magic EA, whatever it is, or you can invest a longer amount of time at first, work a little bit harder, develop those foundational elements of knowledge that will allow you to develop and build a strategy and adjust and adapt in the future. And many traders looking for the shortcut tend to look for the indicator side of things because it's a lot easier than reading price action, believe me, right? If I told you, hey, you have a choice between analyzing a price chart, identifying support and resistance, which is going to have some subjectivity to it, reading a candlestick, versus, hey, looking at this indicator and telling me when it goes above or below a certain level, or when it crosses or doesn't cross, right? It's a lot easier to go the indicator route. The problem is a lot of traders do that thinking that it's that simple, like it takes no work. The honest truth is, right, most of these indicators don't work at all. Many of these indicators will probably not work in their default setting. And if you want to be successful in trading indicators, you have to know, first of all, what that indicator is for, how it works, and how to make the proper tweaks and adjustments to get it to work for your liking, meaning to get it to tell you what you're actually wanting it to tell you. And because indicators are based off price, indicators are lagging, right? Indicators move and adjust based off price action in some format, right? All of them. The more you know price, the better you can understand what's happening on your chart, the better you can understand how to adjust and adapt your indicator to tell you or confirm what you want it to confirm on your chart. So in today's episode of The Trading Edge, what I'm going to do is I'm going to give you a sneak peek inside one of our live trading room sessions where we had a conversation about alternative use of indicators. So not just like, hey, indicators usually don't work on their default settings, but also how to be creative and think about different ways you can use those indicators. Because I want you to think about this, right? If indicators were so magical in their own right, on their default setting, there would be a lot more successful traders out there. There's only a handful of successful traders, right? And we can go back to the kind of the Mark Douglas pyramid hierarchy of trading, right? There's only so many that are at the top. So the ones that are at the top are doing something that is creative with their technical analysis. And then there's the whole psychological jazz as well. So let's pop into the trading video, and I'll see you at the very end as well. Oh, before I forget, promo. We got a free workshop coming up, right? Our biggest workshop ever. This is our flagstone event, EMERGENCE 2022 coming up. It's going to be a 2-week workshop. You can sign up 100% free. There's going to be live sessions. There's going to be on-demand sessions. Everything will be recorded. You can hop into live rooms, download software, indicators, read all about it on the page, but link in the description box below, or just head to www.tier1trading.com. Sign up, Emergence 22. I believe it starts April 11th. It's going to be a 2-week event, 100% free. If you're looking to learn how to become a consistently profitable trader, whether you're using indicators, whether you're using price action, whether you're in Forex, cryptos, stocks, commodities, whatever, you want to be a part of this event. So sign up, Emergence 22, starting April 11th, www.tier1trading.com. Now we can hop into the lesson. Right? Different ways of using things. So that'd be, I'd be confident again in 2 things. 1, that the default settings for your indicator won't work. 2, that you may want to try the traditional way of using an indicator isn't always the best way. And if you think about it, right, if these indicators were so magical and great, especially in their default form, why would there not be a lot more successful traders out there if these things are so great? So you always got to experiment, think outside the box. And that's why it's important to kind of understand and firstly do research of like, hey, what is my indicator actually telling me? What is my indicator actually telling me? Another example for the RSI is this, right? Same as the Bollinger Bands, right? If I ask you how do you traditionally use the RSI, what do you guys say use the RSI for? Right? Everyone says overbought and oversold. Would you guys agree? Overbought and oversold, right? What if I told you the RSI could be a breakout indicator? And I want you to think about this for a second, right? I use 80-20 because I'm looking for extreme levels, but let's use our traditional ones of 70-30, or let's even go to a 60-40 if you go more to like the zones thing that I mentioned earlier. That some of you guys know about because every year I get on a big rant about it, right? So the RSI, overbought and oversold, is the traditional use for it. Many people even believe that the RSI stands for the reversal signal indicator. Let me ask you this. What does the RSI actually measure? Does it measure reversals? It's in the name, right? It measures strength, right? So the stronger that price action is, price movement is in that direction, the higher or lower that RSI is going to go, right? So when the RSI is oversold or overbought, let's say, that means that there is a massive amount of strength, bullish strength in the market. Does that make sense? Bullish momentum in the market. Does that make sense? Because we wouldn't get to overbought if price didn't push it there, right? Now, when you're looking at it as reversals, you're under the premise, and that's why I like using the extreme zones of saying, hey, eventually when something's overbought, when there's so many people that bought, eventually the buying pressure has to slow down. Eventually there's going to be some profit taking. Eventually there's going to be some relief. And that's where you get those little reversals. So that makes sense. But what if I told you that, right? And think about it like this as well. The higher the RSI gets, the more work it takes to push it higher, right? Because this indicator is confined between a zone of 100 and 0, right? It's easier to push the RSI from like 40 to 60 than it is to push it from 60 to 80. Does that make sense? So the higher the RSI gets, the even more momentum it takes to push it higher. Let me know if that makes sense. I don't know if it does. It's kind of like learning a new skill or like running or losing weight, right? When you first start losing weight, it's very easy to drop those first 10 pounds. Right? You're like, oh man, I dropped 10 pounds in like a month. This is awesome. But then it takes you like 5 more months to drop another 10 pounds, right? As you get to more your normal optimal weight. So it takes more work to get the same result. So keeping that in mind, what if you had a breakout strategy? And I'm going to hand pick one here because it's just for example purposes. What if you had a breakout strategy that said, well, I'm going to buy every time the RSI goes over blankety blank level. So you look at your RSI. Look at your RSI. Look at your RSI. All right, here we go. One too far. Look at your RSI. Let's go back one. Again, non-traditional way. And you said, hey, if RSI goes above 60, I'm going to buy. Not a bad move, right? Obviously, you want to have rules. Do you take profit when it hits 80? Do you hit profit when it takes 90? Do you take profit using another indicator, right? Do you use my second favorite indicator, a stochastics, and you take profit? You got to customize this as well. I never remember my settings. Nope. I have settings that I like, but I never remember them. It's like it's the opposite. They're written down in a book. I'm trying to remember what I always start with a default version, and then I kind of go from there. But I'll just bring whatever. It's in the book Street Smarts. I took it from. But anyway, let's say your take target or take profit, excuse me, is when your stochastics crosses your K and your D cross, which I think happened. Nope, not quite. Let's try one more. Yep. So boom, this is your take profit. Well, all of a sudden, you've just collected from, where do we go overbought or over 60? Which would be our, here's your winning trade right there. All right, let's take a look at a different example. I'm gonna just randomly scroll back because obviously I handpicked that one, but I'm gonna randomly scroll back. I'm gonna try and look at only my RSI here. And this is a good way to do it without cheating, right? Just close price up and only look at a spot where your RSI goes over sold or bought. So let's take this one. This doesn't look like a very enthusiastic move, so maybe this will be a good one. Let's go right here. It looks like a losing trade to me, but we'll see. Because you want to look for losers. Easy to find winners. So let's take a look at this. And again, this 60 and this is just random, 60 and 40, not random numbers, but obviously not necessarily the best numbers. You have to experiment with what that is, but just to get the purposes of like, this is a way you can use the indicator. And you probably never even heard about this before because it's not the popular way. This would be as a breakout trader. So boom. So here's your entry. You went oversold or over whatever oversold is right here. Let's see what happens. And we're looking for a recross of the, let's say we're looking for a cross of the, so right now your stochastics crossed here. So probably not getting a lot of that out of here. So if you're using that stochastics as your exit indicator, boom, you're done already. Curious to see how much this plays out though. It didn't look like that much of a convincing move. All right. So it did end up going down a little bit before hitting back up. So again, the move ended up going in your direction. You know, was it a great move? Probably not, depending on what your exit indicator is, whether it's the stochastics crossing, you would have been out very early. If it's the RSI hitting a certain level, again, we used what, 80 for the top, so that would be 20 for the bottom. We actually never hit 20, so maybe you're stopped out for break even. Maybe you have a rule where the RSI, if the RSI hits 20, then I look for stochastics cross. It has to be a combination of the both. There's so many things you can use there. But again, a good example of, hey, that RSI indicator, you're using it in a different way than your quote unquote traditional way, right? But if you think about it, and again, we just explained what the RSI actually is, now that you know, sorry, voice is going, give me a second. If I told you this initially, and I'd be like, well, yeah, trade breakouts with the RSI, you'd be like, Kill, you're stupid, right? But if you understand, once we talked about what the RSI actually is, a strength indicator, right? Does it make a little bit more sense? Like it does kind of make sense now because you're playing strength and the RSI is confirming what you want to do, which is being a breakout trader. So can you use that in situations where price violates structure? If you're a trend continuation trader or you're a trader that's trading high and tight flags, and you use an RSI above a certain level to confirm that strength is in that direction? Sure, right? What if you're looking at the Dixie comes to mind, not the Daxie, the Dixie. I guess that could have went wrong in other ways of writing it, but the Dixie comes to mind where we have this high and tight flag here. Maybe we can look at the DAX as well. So maybe you're looking at this bad boy here and you're like, okay, high and tight flag, is this going to be a breakout? Well, if RSI ventures above 60, then I buy. And maybe that happens right here. And you get in before the breakout. Let's look at the DAX real quick. That had a good example of a bull break. Back down here in the 4 hour. I'd be curious to see if the RSI did anything here. Here was our breakout right in here from last week. Did we, where's my ATR is going to be weird, but did we, be Curious to see if we broke above anything. So right here is when we broke above, we broke it to 70, right on this candle. You might have positioned yourself before the break. So, different ways to look at indicators. I blew some of your minds today. You're like, what? Let's go back to Canada Swiss. I'm going through the chart questions now. Bobby said, this is what annoys me when people say this or that doesn't work. Yeah. So hope you enjoyed that. And one of the questions I get a lot about our education is like, hey, what strategy do you teach? And we do teach a handful of strategies here at Tier 1 Trading, but we don't like to look at ourselves as teachers that teach strategies. We teach you the skill of how to become a consistently profitable trader. So when you go through courses and all that stuff, right? Yes, there are strategies out there that you can pick up and use, but what we want to help you develop is the skill of trading. So you can take stuff like what we just talked about in the video and know what adjustments to make. Know, hey, I want to wait till price action does this, or hey, I want to use this indicator this way, or hey, I want to do this, or hey, I want to do that, right? If you have the skill of trading, once again, you can do one of two things. You can take one of our strategies or any strategy that you see out there on the internet, and you can learn how to filter and tweak it and mold it to fit what you want to achieve as a trader, or you can also go about developing your own. So once you have ideas of what you want to achieve, hey, I want to do breakouts, I want to do reversals, I want to do continuation, you have the knowledge and you know, hey, what bits and pieces of information can be used in the way that's going to help my specific trading style. So I'm always a favor of education. Again, teach a person to fish, they'll eat for the rest of their lives. Give a person a fish, they'll eat for a day and then be hungry again. Probably learn how to fish, but that's up to you. And if you want to get started with that, sign up for our free trading event, Emergence 2022, April 11th, 2 weeks, free live sessions, recorded trainings. Yeah, do it. All right, see you guys next week.